Happy Sunday, everybody. It's going to be another fantastic day, especially if you're a home buyer, because sellers are now starting to cry because they're having to drop some of their prices because they were overpriced to begin with. But I have somebody that we're going to be talking to in just a moment, and she's from the New Jersey market and is a close, dear friend of mine. Just love her to death. But I need to do a little housekeeping first. It was brought to me and to my attention through an email with a discussion of how it was unprofessional, how sometimes I say the word realtor and realtor, and it makes me look unprofessional because I say it incorrectly sometimes. And in the grand scale of things, of everything that I put together, all the work that I do in all of these videos, if that is the one thing that just totally turns you off about my videos, is that my mispronunciation of either using realtor or realtor, don't watch. I'm sorry. The context of everything that I've said, if that's the one thing that you can't handle, don't watch. That just blew my mind that they actually took the time, typed out a whole entire email, scorning me for my unprofessionalism because I mispronounced the word realtor. Just so silly to me. So silly to me. Anyways, so I have this friend of mine. She's out of the New Jersey market, and she's been seeing price adjustments in her area. And I think it would be really good because we don't have a lot of people that come onto the show that I get to interview that are from up north. And this is one of those markets they've been talking about in a lot of news articles with the prices coming down. And I've seen a few more articles that have come from different publications talking about sellers being like upset because the party's over. So anyways, let's get to it right here. Jackie Baker from New Jersey. She's coming in. Hello. Thank goodness. Hello there, Jackie.
Hello, Miss Kristina. How are you?
So are you a realtor or realtor?
How about we say we're real estate agents? How about we just do that? Make life easier. Just say we're agents.
Oh, no, I pay those dues. I'm a realtor. I pay those dues.
Well, you better make sure you pronunciate correctly because I get the same thing. I got it too on my videos, my TikToks. I'm like, really? Yeah, scroll on. If you don't like the way I'm saying it, you don't have to listen to me. So anyway, crazy. Thank you for having me. I'm so excited to be here. This is awesome.
Of course. If nobody knows this, but she's one of my closest friends. I just love her to death. And every time we get on the phone, we talk forever and ever and ever. And I'm like, why haven't I not had you on a live stream? We're like, it's time. It's time to have you on a live stream.
Thank you. Thank you. I'm honored too. Cause I'm a big fangirl. So thank you. I appreciate it. So stop. All right, so let's have fun. Let's chat.
Let's talk about it. Let's grab some coffee and talk about it.
You got that Jersey accent down really well. So,
well, I'm from New England. I'm from the Boston area. So
I know.
I can throw it on.
Good.
All right, so let's get into the first article because this came from Yahoo News. Not that this is the most credible source in the whole entire world because they love sensational headlines, but this actually ended up being a pretty decent article. Eddie, if you could put that on the screen for me, I would love it. Thank you. Thank you so much, everybody. Does everybody have a cup of coffee in there with them? Because we can talk. I'm awful clamped. Home sellers are realizing it's no longer their housing market. Well, we knew that. Housing market, it has rapidly changed. Sellers once in the driver's seat at the start of the year are much more accommodating to compete at home sale at borrower costs. Complete a home sale as borrowing costs skyrocket for home buyers. We all know this because interest rates went up, so home buyers are less likely to be buying their houses that were overpriced. A growing number of home sellers have been forced to readjust their home prices in recent weeks. According to Redfin, an estimated 6.1 of homes for sale during the 4 weeks leading into June asked for a price drop as a record high as far back as data goes throughout the start of 2015, which isn't a bad thing. Like this is the readjustment that we needed because some of these home sellers were asking for the sun, moon, and the stars. Mm-hmm. That comes as mortgage rates hit 5.7, which is a little down last week, which is nearly a 2.5% percentage points higher than the beginning of 2022, regulating some some buyers to the sidelines with busted budgets. But I mean, this is a good thing because it's a readjustment of the market. In my opinion, this doesn't mean that this is a housing crash. I don't know if anybody saw my video on Tuesday. I think the only indication that we're going to have a housing crash, which is more than 30 to 40% of home prices going down, like that, the amount that much going down, would be a decrease of the jobs market. That was my biggest indicator. Anyways, if you are overpriced in your home, if you overprice your home in any market, you're going to feel resistance. In the last 3 years, sellers have been able to get basically whatever they want for their house. We're just not in a market like that right now, which is good. You know, back to like normal negotiations. We all needed this because it was ridiculous. The party needed to stop. So this is the mortgage rates. This is a little chart from Freddie Mac that Yahoo Finance put in there. The dream of homeownership has slipped out of the grasp for many would-be home buyers as costs rise. Homeowners thinking about moving should know that while recent sellers have enjoyed favorable housing conditions, that included high prices with fast sales as the tide is shifting. Realtor.com chief economist Daniel Hale told Yahoo Money higher rates and home prices mean that home buyer budgets don't stretch as far as they used to, which we're all saying that. Now, you, Jackie, are in the New Jersey market, correct?
Correct. Yep. Right outside of New York. So I'm in I'm in Bergen County. So I'm outside the suburb of New York City. So yeah, we're seeing it a little bit here. But the inventory is still low. But we're not, the bidding wars have definitely calmed down. We're not seeing, 50 million offers on a house. But during that period, the last 2 years, I agree with you. It was so out of control. I was getting scared because we were seeing homes sell for $200,000 over asking price. And if you go further south from where I am in Bergen County to Essex County, which is easier access into New York City, in Montclair, this town of Montclair, where it has the same thing, $200,000 to $300,000 over asking price. I'm like, oh my God. Like, people were doing anything to get a house. And the part of the problem was we had so many people from Manhattan during COVID escaping the city. So that's why we had our demands. I mean, listen, we were in a seller's market before the pandemic. New Jersey, we were doing very well. And once, we had the millennials in the beginning of 2020, we knew that was coming, it's going to be a good, strong market. Pandemic hit. And then like half of Manhattan tried to move into New Jersey. And that's what really drove those prices up. But I am seeing it. I think people are like, they're kind of in a culture shock right now. Like, cause everyone's been so used to how crazy it's been. And it's like, I will tell you, as of like Memorial Day, I listed a home right prior to Memorial Day. We had multiple offers, not a lot, but then the buyers backed out for whatever reason. One had an issue with their mortgage. One ended up getting a house instead because I was selling a townhouse. And then all of a sudden, crickets, like nothing, right? Which is kind of normal when we come into the summer, but it was worse in the past. And I knew it. It was because those rates were going up. And I've done polls on my channel. It's like, and asking, are you out of the market right now that rates are up? And 70% of people are saying, yeah, I'm out. So the sellers, it's a wake up call, but we're going back to normal. That's all that it is. Right. It's not crashing.
Right. But I will say this too. This is kind of one of those things with home builders. So home builders, new home builds used to go about 25 to 35% to first time home buyers.
Yep.
Do you know that number is only 14% now?
No.
Because the homes that they're building are so out of the price point for first-time home buyers. Only 14% of the brand new homes that are being built are built for first-time home buyers because the houses prices have gone up so much.
Yeah. I believe it. I believe it. It's so out of control.
Oh, look at this. Newark, Jersey City, Metro.
Look at that. Thank you, Eddie.
So is this the Zillow Home Value Index? So the value of the houses have gone up this much.
Yep.
So
for where I am in Bergen County, I would say it's probably about that amount too, about 10 to 13% year over year. But it's not, like I said, it's not crashing. It's going to slow down. The appreciation is going to slow down now that the rates are up.
Which is good.
Which is awesome. But it's not crashing. Like the video, I watched your video from last week about, about these markets crashing. It's not going to. So
I didn't say it was crashing.
No, you never said it was
No.
crashing. It's not crashing. Like you said, and I
This
agree
was
with that. It's not.
right.
And
What I was saying is that in order for us to see significant price drops throughout the country, now I'm
yeah.
not saying this is gonna be true of every single area, but
Yep.
to see significant price drops like we did in the last housing crash, we would have to see a jobs market that was failing.
Yes.
And once that starts happening, that's when you need to start paying attention. But even then, it takes months. So if people started losing their jobs and they weren't be able to pay their mortgage, it would take a good 9 to 10 to 15 months for those homes to actually start making it to the market. The foreclosure process is not anything very slow. It's a very long process before those houses hit on the market. And half the time, especially if it's on the homes that are like the smaller homes, you never see them because some investment firm has already made a deal with a bank buying all of their crappy houses, like
Yep.
all their small homes. They buy them in bulk and they
Yeah.
fix them up, and either A, they sell them, or B, they put them up for rent. But here, that's their new thing. They
I
like to
know.
put them up for rent.
Yep.
Is the recession canceled? A strong jobs report appears to make a mockery of the shrinking economy argument. So yeah, that was one of those things that was supposed to be coming out like on Friday. The new jobs numbers had come out, because if you looked at my comment section, people were like, well, you know what, wait until those come out. So the U.S. economy added 372,000 jobs in June, according to the Bureau of Labor and Statistics, blowing away economists' estimates of 250,000. As a result, private sector has now recovered all its jobs it lost during the pandemic. So I kind of think some of this inflation, honestly, was, a lot of it is created by corporations to make people want to work again. Like, make that it's so expensive, they have no choice but to take that second job that nobody wants,
Right.
like that
Yeah.
waitress job.
Yep.
I don't know if that's true. That's just one of those things I was thinking about. I'm like, because some of them had no problems, none whatsoever during this whole entire pandemic. But they're like, hey, this gives me an opportunity to make more money, and I can get more people to come work for me for cheap, for money. So if we increase the price for all these products, all of these things that makes people struggle more, they're going to have no choice but to get another job. And it would be a job that wouldn't necessarily that nobody wants, like nobody really wants to, do a lot of the things that are like the lower end jobs. But anyways,
Right.
so like I put that question out there. Are sellers taking major price cuts in your area? I want to know in the comment section. But we do have a question right at the top. Eddie, make sure that you put up Donna's question that she had right at the beginning, because this was a good one. And I have a really good response for you. Donna. Okay. So Donna says, question. I was told by a friend that I can't get a mortgage because I just turned 60 this year. Donna, your friend doesn't know what they're talking about. My parents are in their 80s. And they signed a 30-year mortgage. My dad never laughed so hard in his life. He's like, boy, they really have high hopes for me. It's age discrimination. They can't not give you a mortgage because of your age. It always goes by your credit and your debt to income. They can't not to give you a 30-year mortgage because you're 60, 70, or even 80 years old.
That's true. Yep.
It is a protected right.
Yes, it is.
For now, who knows? By October, that could all change.
Who knows? Exactly. Oh my goodness. So
you wanted to go ahead. You wanted to add something to the.
So, getting back to with the home sellers, not, that they have to come to terms with this. I mean, I'm not seeing a lot of reductions yet. And I think it's so funny, but I'm seeing a lot like homes just sitting out there. And I think the home sellers, like I have an example right now. I have clients, their homes been on the market. We finally got a decent offer last week. We're going to be under contract, I think, hopefully tomorrow. But I think they're still holding on to no, I'm going to get my price. This is what I wanted, and I'm going to get it. I'm still seeing a lot of that out there. Now, a thing I wanted to bring up, somebody commented on my channel just recently. So they bought a house in 2019, a little over $400,000 with a 4.125% interest rate. They refinanced in 2021 to 2.25%.
Okay.
He says, now tell me, how can I sell my house? With the equity I have, if I buy another house that is equal more or less with the 6% rate. So I think we're going to see a lot of this too. People who refinance, like I think what my point is, it's going to affect the inventory even more. I think more people are just going to stay put now that the rates are higher, and houses are still expensive. They're, you're not, it's just, I can't even talk right now. I just think that's going to affect the inventory. And I said this in one of my videos about a month or so ago, that I don't think the inventory is going to improve that much now that the rates are up, because it's making people stay put. Because
And it's also making home builders say, well, because the rates are up, we're going to have less buyers, so we're not building as much. They've actually pulled back as how much they're buying. But I've said that as well, Jackie, that I think we're going to be in a rate of stagnation when it comes to the housing market. There's going to be a lot of stagnant housing markets. Now, I'm just saying as a blanket statement for the whole entire United States. There's going to be some areas that are affected that with price changes and even some price drops. Some are just going to remain the same. Some may even go up a little bit. The Miami market up in South Florida and all that, they are still flying high like it's 2021. They are still multiple offers, still going crazy. So that's why it's super important to work with a real estate agent in your specific area. And don't just listen to me. Don't just listen to Jackie. Listen to a lot of different sources when it comes to the real estate market. Because I talk about the real estate market as a whole. You're talking about it specifically about your specific area. So
exactly. Yes. Yep. It's very important.
Matt Daniel says, happy Sunday. I hope you had a great 4th of July. Question: how many landlords are retiring and selling their inventory? Happy bargain hunting. Great studio. Thank you. I'll give you this. So at like 10 years ago, there was this big report that had come out that was done, a study that was done, and saying there's going to be a big giant problem with as many baby boomers that are going to be retiring and selling their homes, their individual homes, and selling any kind of assets they have when it comes to rental properties. That never came to fruition. Matter of fact, most of them held on to their properties and bought 1 or 2 more properties as extra, like playland kind of properties. So for me, the individual retiree getting rid of their inventory is not going to be the problem. The only problem I see with a massive inventory is if these institutional investors decide all of a sudden to dump their inventory. Like if Blackstone said tomorrow, you know what, we're getting out of the housing business, and they're throwing all their houses on the market, that could be an issue. That could be a major issue. What do you say?
I think so. Yeah.
Jackie.
I know. I agree with you. But let's be real. Do you really think Blackstone's going to dump all their housing right now? No, I don't think they will. I don't think they'll ever do it. I don't think they would ever get rid of it.
It isn't just that. They're like, we say Blackstone, but they have all these other companies umbrella underneath it. So
right. They're going to sell it off to somebody. They'll sell those properties off to another company. They'll never, it's never going to go back on the open market. I did a live stream with Trevor Smith a while back, and we had talked about this very thing. Like they're gone. Let's face it, they're gone. They're going to be within that realm of the corporations, and that's where they're going to remain. So it's my thought.
Small Wildflower says, my landlord gave me 90 days and said they're selling. Was online for 2 weeks and pulled it. They said they're going to wait because it's worth its weight in gold in 20 years. Well, they probably wanted too much. Can you hear that?
Ooh, was that thunder?
That is thunder and lightning. Ooh. Very, very frightening me.
Ooh,
Galileo,
be careful.
Galileo.
Oh, my.
Thunder and lightning and rain, oh my.
Oh my God.
Yeah, well, some of these landlords need a little reality check too, because honestly, they have raised the rents. It is historically high. They've raised it so high. And some of the landlords haven't even been maintaining the properties. This one apartment building in Texas did such a crummy job, like maintaining the place. They did like the bottom floor kept flooding all the time. The elevator wasn't working. This guy was like, I'm traveling up 8 floors just to get to my apartment. And then all of a sudden they had so many complaints about them. They were like, they told everybody in the apartment building to go ahead and move out. They had 30 days to move out of the apartment building.
Oh my God.
Can you imagine? They're like, where do we go?
Like, where do you go? And then who can afford it? Right? I mean, how bad are the rents down by you? How expensive is it?
Well, for our little town, they're stupid. Like, honestly, they're really dumb. We've always had a shortage of rental properties as it is. We don't have enough apartment complexes. You put your house up for rent, it is going to rent out with no issue. But they were reasonable. They were in line with the incomes in the area.
Right.
Now they're way, way, way above the incomes in the area. Totally out of skew for what you get. It's crazy. I don't do it. I did not raise my rent. I actually dropped it because I didn't want my people to move out. Yeah, they lost a roommate and they're such good renters. And I'm like, what if I dropped it just a scotch? Just so you stay, because I didn't want to have to deal with new people.
Oh, good for you.
I know what I'm getting there.
Exactly. You know what you have. Why don't mess it up? So
I don't want to rock the boat.
No, I don't blame you. I don't blame you at all. You get a good tenant. Like, I have a good tenant too. Like, I love them. I hope they stay forever because they've been so good. So yep.
We got another question. It says inventory is up thanks to Opendoor, Zillow, and such backing off, allowing sellers to list on open market. Zillow had literally 6,000 homes they put up for sale. In the grand scheme of things, of all the housing markets, if you take all those 6,000 houses, that is barely a thimbleful of inventory that's needed for the market. Opendoor, like all those other ones, are still in good shape. They have not had a problem. Their biggest issue during the pandemic was to find enough contractors to come in and fix up the houses so they could put them back on the market. But their business plan is still flying high and doing just fine.
Right.
I don't see their inventory going anywhere. And then you still have those companies like Tricon and Buy to Rent and all these other companies that are buying up the most affordable homes in the hottest markets just so they can hold on to them to rent them. Yep. And even in like I talk about this all the time, but some areas of Texas, some areas of Arizona, if you see a lot of new construction, they look like perfect for the first time home buyer, except for they're building those for rent. They're building those houses specifically for institutional investors just for them to rent them out. And it's a whole new business model.
I know. I don't like it at all, honestly, but that's for another time. We could talk about that.
Jeremy Knight is giving me a little congratulations here because he says it's 200,000 subs. Here we come.
Yeah. Oh my God. If you don't get struck by lightning, I mean, good Lord,
I'm grounded. I'm grounded.
Okay, good.
Thank you, Jeremy. Yes, it's right on the corner. Question. I see luxury real estate homes dropping. Yeah. But the new luxury homes are not budging. What do they know we don't? So if you go into Manhattan, and you can talk about this a little bit, Jackie, is that that luxury market, those people that are paying cash for like $3-4 million properties, they've slowed down too, because I think they've been hit by stock markets and stuff like that. They work off of those kinds of investments, so they're willing to trickle back. And this recession, or not recession, but interest rates increasing, stock market's not doing as well, cryptocurrency's not doing as well. That makes them less likely or less enthusiastic in buying in real estate at the moment, like especially high-end, high-dollar type of purchases.
Right.
So that's what happens there. If I don't feel bad for that.
No, well,
go ahead.
But if I can answer that, I mean, we have a lot of luxury homes here in Bergen County, $1 million to multi-million-dollar homes. And I mean, there were a couple of those towns that were primarily those, the luxury homes. They would sit like for a year before their houses would sell. I mean, nothing. But I could not believe during the pandemic, the people from the city all of a sudden, like those houses are being scapped up. And I'm not kidding you. They'd be on the market like a week, less than a week, gone. You know, $2 million homes gone. Like who, oh my God, what happened? You know, but it's going, I see it. It's dropping again. We're not seeing the activity as much on those
Well,
luxury homes now. So you're right. You're absolutely right. Everything's impacting those buyers.
right. And then the thing is, for my little town to buy a $600,000 house is like that's a big deal, right?
Yeah.
And like I would say, like the upper middle would be like 350 to that $600,000 range. That market for some reason like boomed over the last 2 years. And if you were under that mark, where you were just just the first time home buyer getting into the market, holy cow, like you could literally put up a outhouse in the backyard and be like for sale, and it was gone instantaneously.
Yep.
It was nuts.
Yeah, I believe it.
Man, it is storming here.
I hear the rain. My God.
Here comes the rain again. This is how the sellers feel right now. Rushing on my head like a tragedy.
How apropos.
Who knew you were going to get some?
Did you? I think you planned this.
Software. Yeah, right. Is cash still king for buying a home? Well, cash will always be king no matter what market you're in. Like, it doesn't matter. Yeah. It will always be king.
Yep. 1,000,000%.
Blackstone Software. I wonder if you work for the Blackstone Corporation, like the big hedge fund?
I don't know.
They're watching me now.
That was going to say, you better be careful, Kristina.
They got their eye on me.
They're watching you.
Yeah, they're gonna throw it down. Eddie, you gonna put up another question? Here we go. S has a question. I've heard that appraisals are coming back with lower values as lending has tightened. Appraisal gap coverage has applied in recent years, but I don't know if it would last forever. What do you think there, my friend?
I think I'm glad somebody brought this up because, yeah, the last 2 years when we would go in with an offer, we're like, waive the appraisal, we have the gap covered and all that. But recently, people aren't doing it. They're not going in and offering the appraisal gap anymore. And this is just as of like literally a month ago. And people just put it. It's amazing how things change like that overnight. But like the listing I have, every offer that we gotten, even though like the first couple of offers we got were over asking, not a lot, but they were over, they would not put that appraisal gap in. And I was like, those days are going away. And I'm kind of glad about that too.
Me too.
Right.
Me too. And I'm glad that people aren't foregoing their inspection period too. That every single time I instantly sweat when they're like waive the inspections. I'm like, can we do inspection for information only then? Like, can we do that? And then I'm like, can we at least write it for information only unless the repairs are over $10,000? Yep. And they're like, oh yeah, let's do that. I'm like,
that's what I know. That's what I would do all the time. It's like, well, no, we're going to look for structural, environmental, mechanical, that's it. We're not going to, don't waive it. And the appraisal thing really stressed me out. And I had quite a few clients last year that did that. They didn't care. They're like, no, we can cover the gap. Don't worry about it. I'm like, oh my God. I'm surprised I don't have an ulcer by now. What the stress of the last 2 years.
Did you have them sign anything saying that this wasn't the best recommendation for you and that you had suggested something else if like something was so off? Like for instance, I had somebody that said, no, I'm not even doing that. Just, I want to get the house. I'm not even going to ask for that. And I'm like, well, there's a lot of, this is an older house. This was built in 1993. You should have at least the $10,000. If it's over that, it's going to be fine. They've done some really good work there. I'm like, you don't know what's underneath the hood.
Yeah, absolutely. Absolutely. No. So in New Jersey, so we have attorneys. So, us agents, we go in, we submit the offer on a standard contract that we fill out. But then once the offer is accepted, and then the attorneys step in. So it's there where they draw up the final addendum, and it's in that portion where they put, that whether they're going to cover the appraisal, or if the house doesn't appraise, the buyer has the right to either come back and renegotiate the price or walk away from the deal. So it's on that rider where they'll sign off on it. If they're gung-ho, like, yeah, I'm waiving the appraisal, that's the attorney. And the attorney's like, I feel for them, because that's on them too.
Yeah,
So
we don't have that here. Like,
yeah.
that's why it's so important to like understand your real estate transactions in your specific area. Because if I was to move to New Jersey, I would have no idea that's how it worked.
Yep.
And I'd be like, tell the real estate agent. I'd be telling the real estate agent because I think I know stuff because I'm a real estate agent.
Yep. Yeah.
And she'd be like, no,
you think,
no,
but
let the attorneys handle this.
exactly. But that is the good part. And then sometimes and it would get tough too. Cause like if my client would say, no, I definitely want to waive the appraisal, and we would go tell the attorney that, then the attorney's calling me. He's like, why are they doing this? I'm like, I explained to them, how this works. And, and they go back to the attorney like, no, it's fine. That's what we want to do. And so what are you going to do? Because everyone was so desperate to buy a house. This is what people did anything,
Well, I mean, those interest rates were so low. At least it's under 6 now, because that 6% was like making me.
I know. So I was like, oh my God, they went back below 6 again. Like, what is going on? It's like the weather changing. Yeah,
but that's how mortgage rates always have been,
right?
They've always kind of one day it's 6%, the next day it's 5.75. And you're like, what happened in the last 24 hours that made it go tickle tackle like that?
Yeah. Yeah, it's crazy. I'm like, because I'm thinking, oh, it's going to get worse from here, and the lenders I talked to like, oh, it's probably going to hit 7% by the end of the summer, like, oh my God. And then it's like 5.75. I'm like, I'm going to have a heart attack. Like, this market's driving me crazy.
If the inflation rate continues to go up,
yeah,
I don't see how we couldn't be at 7% by the end of the year.
Yeah.
That's what I'm
saying. I agree with that too. Yep.
Yeah. So, Eddie, if you could put up a next question, that would be grateful. Thank you, sir. Thank you very much. Well, someone just jumped on. So, so the housing market is it's going to be a buyer's market again. Well, not yet. We're going to be a flat market. At least the buyers will have some leverage. Question. Clarity on a question. Say that rent can only increase 2% max per year, like rent stability. That is... we don't cap rents in most markets. Some areas like New York City will have rent caps, like they can't go up X amount.
Yep.
I think in some areas of Oregon, it can't go up any more than 9%. But like Texas, Louisiana, Florida, they don't have any price caps. There is no such thing as a price cap on rent.
No, not
here.
Go
as high as in Austin, it went up 35%. 35%. Can you imagine?
Oh my God. Oh my God. That's outrageous. It's like, it's almost like the Sun Belt is almost expensive as up north now, up in the Northeast.
Oh, I know. And it used to be like I would talk to my friends up north and I'd say like, oh, my husband and I just got an apartment and it's, it's 800 square feet and it's, we were paying, I think it was $800 a month. And they were like, what? I'm like, yeah, let me show you, give them a whole tour. And they're like, wow, that's awesome. And my brother who came in from New York City, he was like, this would be like $4,000 a month. I'm like, I know, I feel like I'm in a luxury hotel. So nice. And it was like tax credit housing. It was like really not like the best housing development there at all.
Right.
It was our first place. What do you expect? Love your hair color, Kristina. What should a landlord do now? Raise rents or wait? I can't tell you what to do in your market. But if you're a landlord that has good tenants that have been paying on time and if you need to raise your rents because of taxes and your taxes have gone up for your specific area, explain that, be honest with your tenants and say, look, the property taxes for this area have gone up this much. And it's costing me more to maintain this house with insurance going up and taxes going up. I have to raise your rent X amount of dollars. I don't want you to move out, but this is how much it's going to cost me. So I have to pass that on to you. That's what I would say.
I agree with that too. Like I just said before, I have a phenomenal tenant. And if I could keep him forever, whatever it takes, because you don't know what you're going to get, on the next tenant. So if you have somebody good, keep them happy. That's my thought.
Yeah. I feel like I'm gonna be like in a minute. I feel like I'm gonna be like spinning around.
Like, oh my God.
Don't be greedy. Raise just to pay offset. That is correct. Correct.
Yes.
Eddie Royal says, "Hey, Kristina, this week, a couple of city council stated that they were looking at ways to limit investment in Dallas, Texas. Stands 45%. Rockwell, Rowlett to Texas, 43%. Is that happening in your area? We do not have a cap of institutional investors that are supposed to be, not in buying in. Now, individual HOAs in my area have a cap. Most of them are 20%. 20% of the neighborhood cannot be rentals. That's it, 20%, and that's capped off. But a lot of areas don't have that. It just so happens that our specific parish does. And if it's an older neighborhood, that wasn't even a thing. So it's not written in their covenants. And I will say this, if you're in an older neighborhood and you're noticing that there's a lot more like rentals in your neighborhood, you can have an amendment put to your HOA covenants, and you can put that in there. And now everybody has to vote on it, and you have to find that out. But you can have that filed at the courthouse. So no more than let's say it's already at 20% or 30%. No more can come in after that.
Oh my God. I'm getting scared for you.
I bet it's quite a lightning show out there. I should open a window so you guys can watch it.
Holy cow. But Kristina, his statement there about that they're trying to find ways to limit investments. And so I'm assuming they're trying to keep out the Blackstones and those corporations.
Not the individual.
So I mean, I think that's a good thing. Mm-hmm. Right? So
yeah, I do think it's a good thing. And last week, I don't know if you saw the show, but there was another person that was talking about it and said, well, I think the markets need to, he said the notion that institutional investors are buying up the most expensive houses and stealing it from first-time home buyers is kind of ridiculous, because the market's going to do what it wants to do. There's no real statistics saying that because this house was bought by an institutional investor that this home buyer couldn't buy a house. And he's like, there's enough free market to make it work. And I'm like, but there's not enough supply of houses to make that work. And they're manipulating not only the home prices, but they're manipulating the rent prices because there's no supply of those type of homes that are on the market. And new home builders aren't building small homes. They're building bigger homes.
Right.
So should we open a window and see what this
can we see?
Like? Let's take a look at this. This is too exciting.
I know. Okay, where'd you go, Kristina? Oh my God. Anyway. Okay, she just stepped away for a second. So, hi guys. Hello. Let me get on right here. Kristina just stepped away really quick. So let's keep talking about this, right? So with these home sellers, another thing I wanted to bring up too, that I mentioned this to Kristina before, that what we're experiencing too right now is a lot of the homeowners, mortgage holders in the country have mortgage rates below 4%. So who's going to spend more money right now? Who's going to give up that low interest rate and pay more money on interest and for a house, a higher housing price, it just to pay more money? It just doesn't make sense. So what I'm seeing, I think that's why the inventory is still going to remain low. I don't think we're going to see a major crash. We're going to see definitely reductions in the near future. I would say through the rest of this year, I think it's going to stabilize more, but it's not going to come crashing down. So I had an article that I was going to share that 1/3 of homeowners have a mortgage rate far below today's level. 1/3 of homeowners nationwide. That's crazy. So like in my state where I am, 50% of mortgage holders have interest rates of below 4%. Like for me, I bought my house 10 years ago and I paid 3.75% interest. So where am I going? Where is anybody going at this point? Right. So I can't see. Let me see here. All right. Oh, I found your comments. Here we go. I will answer some questions here. All right. Anya 8221, Jackie, are you concerned about the layoffs in banking industry and title companies? I'm sorry, banking industry, title company closing offices. A little bit. I'm a little nervous. You know, but again, it's because of what's going on right now. Sorry. It's what's going on right now. I don't know if this is an indication of like any major crashes, like Kristina was saying too. I think she said it was a 30 to 40% of where the job market is affected. That's where we're going to see the recession really have an impact on the housing prices. But I'm not concerned about it. So let me see here. Yeah, it looks like Kristina lost internet. Thank God you're okay, Kristina. All right.
She will be back on in 1 second.
Okay.
So I will continue to run questions if you'd like me to, Miss Jackie.
Yeah, that's okay. I had them on the side here too. I pulled them up. Whatever you want to do, Eddie. I'm cool. I just saw somebody who was here from South Jersey. Where are you? Made a comment about South. Yeah, prices are still sky high in South Jersey and inventory is non-existent. Anthony Tripp. Yes, they are. Like I just said before, 50% of mortgage holders in Jersey have a below 4% interest rate. Where are they going? Yay! You're alive, my friend.
I'm alive. As soon as I open that window, I don't know if you can get a good glimpse at the yard, but I'm gonna try. Oh, it did not work. But it is.
Oh my God.
It is literally raining cats and dogs.
You sure you're not in Kansas? Holy cow.
It is sheets of rain.
Oh my God.
You are such a pro for handling this. I have to thank you. I can't everybody thank Jackie for holding down the fort here.
No problem. No problem. Glad I can help.
You're a sport. You're a total sport.
Oh, no problem. I'm glad you're okay. I got a little nervous. I'm like, oh my God, what happened?
I didn't die.
Okay, good. Good Lord.
Yeah, everything's fine. It just I had to wait for the generator to kick back on. I have a whole house generator.
Oh yeah, so do I. Love that thing. It's like the best.
Yeah, you have to. I find Kristina disappearing very funny. All right, let's get to Lizzie's question. It says, my agent told me not to ask the owner to fix anything from the house inspection because there's nothing major. Sold under asking. What can I ask the seller to fix before waiving my condition? It depends on the market you're in. Like if it's bad, if you're in a bad market, well, you can ask the seller to fix everything. I've even had some buyers ask for furnishings. When the market was really bad, they were like, I really love that couch set. And I know they found that in a different place. You could ask them for anything. It really depends on the market and what's going on in your market. Did you see that? Wow.
Yeah, I agree. I totally agree with you. So, but don't, because there was nothing major as a seller, you can, if you got it under asking, you can, I don't know. Why not? Ask for something.
I think it depends on what you ask for too. Don't ask for like, there's carpet stains. I don't like that. Don't ask for that. Like, I really don't like the way that room is painted pink and I have a son and I want it painted blue. Don't ask for that.
No.
But if there's like leaking roof and that kind of stuff, like ask for that.
Yeah. If there's like mold or something but the biggest thing here is the outlets. Like if they're not the GCFI outlets, you know, I've had that years
the
ago where
sink.
people are like, oh, we need to change those outlets. It's like $40 an outlet. It's like, you know what? Just don't ask for that, especially now, you know, like just let's focus on the big stuff. So, yeah.
Right. But it does make people nervous because sometimes when some of those home inspectors write those reports, they make it sound like the house is going to burn down if this GFCI is not replaced right now. This is a massive fire hazard.
Yep. So true.
You heard that crack of lightning right when I said that.
Yeah.
Massive fire.
better stay safe, girl. You're making me nervous.
I'm going to shut this window because it's off.
Okay. All right, be careful.
Yeah. Okay, the lighting's much better now, I think, kind of. Anyways, let's get to the next question. Wait. All that thunder, I'm concerned about Marcel. Does he have a safe room? Oh, yes. Marcel spends his whole life on a big giant pillow that used to be in this office. If you remember a few weeks back, I did my live stream on a big giant pillow I was sitting on. That thing was too hard and I didn't like it. So I ended up buying a beanbag chair. And so now it sits on the couch because I don't want the dogs to sit on it because dogs smell funny. And so the cat loves it because he's way up high. So he just, that's his thing. He's the king of the palace. Marcel is having his best life. Marcel is just about to move out. He's end of the month. He's on his way out. He can care less. He's just happy that the housing market is still moving. A question. Do you think in 2022, 2023, housing market will crash or will just slow down and stabilize a little? Specifically in North Texas, like Frisco, McKinney, Texas. What do you think? Do you have any opinion about that? Because I do.
I think I don't. Again, it's not going to crash, but like you said before, unless the job market goes to pot. I don't think it will. And I still think personally, I mean, I already know several people that have moved to Texas or are still planning to move to Texas. I think it'll slow down or stabilize. I don't think it's gonna crash. I mean, what do you think?
I still think we're gonna have the stagnation blues. I think we're gonna have a good 9 to 10 months of the stagnation blues. Not a lot of increases, right? Not huge decreases where people were hoping for. It's just kind of going to be Flatsville.
Yeah.
There will be deals to be had though. You know, there will be some people that are like, you know, I need to get this thing sold. And the good thing, thank God, sellers are going to be more realistic and working with home buyers on things like maybe we'll even see some closing costs coming back again. Maybe we'll even see some like home warranties coming back again. Yeah. Maybe we'll even see, you know, like we are already starting to see no appraisal gaps. We're already starting to see that they're allowing for home inspections. And that isn't a sign of a crash. That's a sign of we're back to normalcy. Absolutely. Actual negotiations in a market. That isn't a red flag. That's what it should be. It never should have been as bad as it was for the last 2 years. Bad meaning for a home buyer, not bad for a home seller, man. You could have sold a rock and got $1 million.
I know. Oh my God, please. I know.
It was so crazy. Justin Bubin says, what do you think what do you guys think the future of home inspections will look like? Ooh, this is a really interesting topic. Have you seen any articles about this at all, Jackie?
I have not.
Okay, so home appraisals and home inspectors have had, they're going to be seeing a shift, right? So home inspectors have to validate themselves in a whole new way because, you know, there's so many ways that people understand the workings of a house, right? So now they've upped their equipment, the type of equipment that they use for home inspections, in which they should have anyways. I mean, you can't just walk around with this thing that plugs in all the plugs and say, yep, everything works. The electricity looks fine, right?
Right.
So now they have these like cameras they put up to the wall. They do like infrared, make sure there's no moisture coming in from the bottom. You know, they have more tools that measure moisture. They have more. I think the inspection business isn't going anywhere because they've upped their game on why they're valuable. Like they are a valuable asset. Now the appraisal game is one of those things that we've seen several times where they will take like Zillow does, almost like a Zillow estimate. And they do what they call a drive-by appraisal, which is total horse crap as far as I'm concerned, because they have no idea what the house and the condition of the house is anyways. But they are so confident with the market and how it looks, they're just going to draw a map around it by measuring the top of the roof by a satellite. They'll say, okay, this house is 2,200 square feet. The rest of the neighborhood is selling for X amount of dollars per square foot. This is what the value is, right? So some lenders will go with these type of appraisals. I don't know why, and they're going to end up regretting it, because drive-by appraisals in the last housing market got a lot of people in trouble, a lot of appraisals in trouble. Appraisals got in serious trouble.
Let me ask you, Kristina, are you still seeing those drive-by appraisals now? Because those stopped. I mean, we had it during the pandemic where the appraisers weren't going in the homes, but that stopped a long time ago here. Like, they're going into homes now.
They're going back into homes, but they've, like, some banks, some lenders have said, you know what, there's no reason to spend this kind of money on our end or the buyer's end, because we already know, like, how much everything is per square foot, you know, in a neighborhood, because like, you can see it on computer screen. There's no difference from the appraisal and what the computer was saying.
Right.
And I think there's so many nuances to a property that can decrease or increase the value of it, that I don't think that that's a good idea. But with that being said too, there are some appraisers that put their personal opinions and will decrease the price per square foot for certain buildings for no other reason other than they don't like the sellers. You know, that they've gotten a lot of appraisers got in trouble because they were like,
really?
Yes.
Oh
yes.
my God. Never heard that up here. Oh my God. That wouldn't fly.
I'll send you a bunch of articles, but it was racially driven. And matter of fact, that even what they did was the home seller said, this is ridiculous because everything else in my neighborhood is sold for $150 per square foot. And now my house is only $125 per square foot. How is that even possible? So they removed all of their photographs, anything that related to what they looked like. And they had the neighbor across the street meet the appraiser. And sure enough, the house appraised for $150 per square foot again.
Unbelievable.
Yep. They got in trouble.
Unbelievable.
Yep.
Oh my God.
Yep. Kristina, are you going to float away? Or maybe. I don't know, man.
Please don't.
This is crazy. We've had some really insane rain, but it's welcoming because we've had the heat index has been like 112 degrees with 57% humidity. It's like so disgusting.
No, thank you. Sorry.
Yeah. So I was talking about this today. I saw this comment. I'm going to throw this up on the screen really quick. It says, keep an eye on the subprime auto market for the health of the economy. I didn't realize how many people still had subprime loans. Do you know that home loans, there's still a good portion of people that have subprime loans. Eddie, if you could find that statistic, I would love for you to find that. But I looked that up. I was like, but the difference between how many people have the subprime loans now and then is about the same amount of borrowers. The difference being, though, the people that have those loans, those subprime loans, their credit is impeccable. And the people that had the subprime loans before were like, they shouldn't have never bought a house in the first place. I mean, they had that stated income and stuff like that. So even though there's a good portion of, there's a lot, like I was shocked. There's a lot of people that have subprime loans, but they have a ton of really good credit and a lot of equity. So it's offset. It's offset.
Right. Well, that's a little better.
Yeah.
Cool.
Hypergirl81, love your screen name. That is, I should be a Hypergirl73 because I'm a little spaz myself. What is the future of affordable housing? Also, thank you, Jackie. Everybody say thank you to Jackie. Jackie held down the fort here. She did such a great job. Thank you, Jackie.
No problem, Kristina.
No problem. So what do you think is the future for affordable housing? What do you think is going to happen?
I don't know. I really don't know. I really hope that there would be more new builds for affordable housing. I think I've shared with you, my son, he just graduated high school. He's going into the construction field, and I don't know. I just hope that there's going to be more opportunities, but it's not going to be what you see out there now, the existing homes. I mean, there's got to be, new communities built. And you're going back to our Blackstone friends, scapping all of those affordable houses up. I mean, it sucks. It sucks. But I think the future, I think it's going to, I don't know. We got to get some new builds out there.
I'm a little bit more optimistic than some because of the fact
Why?
that the conversation of affordable housing is more in the forefront of people's minds than it was 3 years ago when I was talking about the fact we didn't have enough affordable housing. People were like, "Oh, why are you saying it's not affordable?" I'm like, "Because it's not affordable." Oh, there's plenty of people buying houses. That makes it affordable. And I'm like, no, it's not. For the average person, it's not affordable. Yes, it is. I mean, I got that argument a million times.
Yeah.
But now people are more willing and open to talk about it because there's a good section of people that are being priced out of the market, and there's less and less of those homes. So I think deregulating a bunch of land that is already available to allow for affordable housing. I think that if they incorporate modular construction, which can make homes be built very quickly, and make them like, 1,400 square foot homes, little tract builder, one right after another, it's very possible to happen. It's happened before. And it's been discussed by the White House about 2 months ago. And that's their plan to make that happen. And they've been talking about deregulating because there's so much red tape. It doesn't matter if it's affordable housing or not. There's so much red tape to get a subdivision approved,
Yeah.
And this has been a problem for years. And they've tried to address it several times, but it's always comes down to the fact that trying to get these subdivisions approved. So if they take federal land, which with what they're talking about, there's tons of land the government owns that wouldn't be used for parks or anything else. It's just dirt. And they turn that federal land into affordable housing options, then it could happen. It could happen because they could also reduce the price of building materials for those builders that are willing to build those homes. So the building materials are less expensive, then it could happen. I think it's very possible. Thank you for the super sticker, Stacy, for the $10 super sticker.
Nice.
Yeah, I know.
Very
This is funny. We have 666 people on the live stream right now. Make sure you hit that like button.
Yeah.
666. That's my number. What's a subprime mortgage? You want to tackle this? I can tell you too. Go ahead. What's a subprime mortgage?
You can do it.
You do it. Come on, Jackie. Everybody's doing it.
You're better at this. You do it.
Okay. So subprime mortgage is that you're basically, it's like what they call an interest only loan. So if there's a period of time that you're only paying the interest payment, but not paying down the principal of the mortgage itself. So the payment is very low because you're only paying for the interest. That's it. Then one day that resets. Let's say it's 3 years, maybe it's 5 years, and they say, okay, now the interest and the principal is together, and that payment is twice, if not 3 times bigger than it was before. But what most people do at that 3 to 5 year moment, they go ahead and they refinance, and then they start all over again.
See, you did a great job.
Yes, subprime mortgage, prime mortgage interest rates that are rates that are at which banks and other mortgage lenders may lend money to customers with best credit histories. Prime mortgages can be either fixed or adjustable rates. More often, subprime loans are adjustable rates or ARMs. A subprime mortgage is generally a loan that is meant to be offered to prospective buyers with impaired credit scores. The higher interest rate is intended to compensate the lender for expecting the greater risk in lending to such borrowers. The interest rate on the subprime and prime ARMs can raise significantly over time, correct? But most people, like, the thing is that even with the ARMs and the subprimes and all this, the people that have these loans now have much better credit history than the ones that they had before.
Right.
A lot of investors will, if they decide they're going to get a mortgage, they'll get it with an ARM or even a balloon payment. But then when the balloon is about to set, when there's a balloon payment is like they have 5 years where you're paying just the interest, and then they're wanting the lump sum of the cost of the house at the end of that balloon, they just go ahead and they go, all right, we'll just get another mortgage. And they've already paid down a good portion of the house. So they just get another mortgage.
Yeah, that's what my father did. He'd owned a mobile home park many years ago, and he had a balloon mortgage on it. And that's exactly that was the plan, because it worked out
great.
Mortgages. Yeah, it just refinanced. That's it.
Yeah,
good job, Kristina. Thank you.
Thanks, Jackie. Thanks, Jackie. Did you have your coffee? Take a sip. I said something good.
You're so welcome.
I want to thank Jackie for holding down the fort, man.
Oh my God. I was a little bit of panic because I was worried about you. I'm like, what happened?
I didn't die. Good.
Awesome.
Thank you, Lawnmower and Debbie, your dreams coach in Diamond Media. Oh, yeah, because the moderators are holding down the block there. Yeah, they did great. Throw up another question, Eddie. I love saying that, throw up, because it sounds kind of gross, but it's a good question all the same. That mug. Somebody said something about the mug. Anytime somebody says anything about the mug, I have to do it. I like big mugs and I cannot lie. You other brothers can't deny. Okay. Somebody sent this to me. A subscriber sent this to me. Anybody that says anything about my bugs, I have to.
Oh my God.
All right. Question: is FHA construction loan legitimate? Would you recommend this loan? Are you talking about a new? Are you talking about a new construction loan? So you can get a new construction loan and then roll it into an FHA loan after the construction's done.
Yeah, that's what I'm just looking that up right now. I never heard of that. That's what I would think. You get a new construction loan and roll it over.
Right, because you can't get a 30-year fixed rate mortgage until the house is complete. But the builder needs their money, their draws, before the house is complete so they can complete the house.
Right.
So you get a construction loan first, right? So and usually it's like 3 or 4 draws that come out. So like they'll get a draw to pull down the pad and to frame it. And once that's complete, the mortgage lender comes out and says, okay, you can pull your next draw. And that's when you get your wiring, your sheetrock, right? And let's just say the roof. Then that's a draw too. And then once once everything's mudded and, flooring and cabinets is down, that's draw 3. And they don't get the complete thing until it actually closes. And that's when you roll it into your FHA loan, your 30-year fixed rate loan.
Yep.
Thanks. Did I do that one right?
You were awesome, Kristina.
Awesome. Did I do a great job? Thank you so much, Jackie.
Just awesome.
Awesome.
We approve from New Jersey here.
Yeah, thank you. All right. CR says, why is 68% of mortgages owned by non-bank lenders? This is much higher than 2008. Why is 68% of mortgages owned by non-bank lenders? That is not a statistic I'm aware of, CR. If you could tell me where you're getting that statistic from so I could do a little more information, little investigation on that. 68% of mortgages owned by non-bank lenders.
That's interesting.
I don't know. Sometimes I get these statistics though. I'll even say like I've like somebody told me that home prices are going to go down. Home prices are going to go down like 50%. And I'm like, how did you come up with this number? Well, I just know. That's not a real statistic, just because you just know. All right, non-bank lenders are dominating the mortgage market. Non-banks issued more than 2/3 of the mortgages in 2020, their highest market share on record. Oh, I'm going to look into this more. Thank you, CR. Okay. Oh, the U.S. mortgage market involves some key players that played important roles in the process. Here's why investors should understand what risks there are when investing in the industry. The Wall Street Journal. I don't buy the Wall Street Journal, Eddie, and that's why this article stops. I have not purchased the Wall Street Journal. It's not my magazine. That's why the article stops. Yeah, but I'm going to look into that. I'm going to write that down.
Yeah, that's a good one. I'm looking on my end too to see if I can find anything about that.
You would think I would know more. I should ask Trevor Smith. Non-bank lenders. I'm writing this down because I might have to do a video really quick on that because I learned something new.
I think you should.
Yeah,
it's a good topic.
Yeah, but it takes me like a whole week to like seriously think about this, research it. I researched a little bit Jesus out of any topic, so that way I know what's on like I know what I'm talking about instead of just guessing. Some people guess though. There's a lot of guessers out there.
Don't get me started. Do not get me started on that. But anyway,
Noelle has a great question. Oh, here it is, Noelle. Question: can you recommend how to investigate modular and manufactured home brands? I've searched for 2 months and can't find unbiased opinions. Should I call local inspectors? Which do you think are quality? Okay, so Noelle, here's the thing. I'm gonna be totally honest with you. Every company that you deal with is going to be completely different in each state. That's because the people that install those homes, it could be an awesome house, but the people that install the house do such a crap job that you're like, these homes by XYZ modular home company are complete garbage. And it's not the house. It was the people that put it together. So what I would do is I would call the people that deliver those homes and ask them what their opinion is, right? Because they'll flat out tell you, like, I wouldn't get this because the people that put it together are idiots. And that's a good place to start. And also look at the reviews of the people that are installing those homes. There's always you can go to the Better Business Bureau, you can look on their Facebook pages, you can look at their reviews. And then I would put out a post on Facebook and on TikTok and on like all the social media sites, as much as you may hate it, like it's a necessary evil in these days, and put out a post and say, have you heard of XYZ Modular Home Company? What have you heard? Do you know anybody that lives in one of those homes that I could possibly talk to? Can you ask them to DM me, and let me know what their experiences was? Because I guarantee it's not the house that they had a problem with. It was the people that put it together and they haven't come back to fix their mistakes. That's 99.9% of the problem. They actually have a good quality home. The people that put it together are idiots.
Tell us how you really feel.
If you wanted a glossed over review, you aren't going to get that from me.
That's why we love you.
Ken Powell says, what should I buy? What should I buy in New Jersey? Go ahead.
What should you buy in New Jersey? Well, anything at this point, it all depends. You're looking, so depending on what part of New Jersey, if you're looking more central New Jersey, you can find some more reasonably priced homes, like say in the 300 or even some areas below 300. I actually just did a video last week, the 6 most affordable places to live in New Jersey. So if you want to hop over to my channel, you can check that out and see what you can get for your money in those towns. It's mostly central New Jersey, and some like western New Jersey, like closer to Pennsylvania. You can get some really cheap homes compared to like up here in northern New Jersey, where it's like super expensive. But if you're looking to move here, you can go into anything: house, condo, townhouse. Where do you want to be? Do you want to be have close access to New York City? I mean, there's some great options between Bergen and Essex County, and you can even go further south to Jersey City, get a condo right overlooking the Hudson River, and you have the views of New York City. So yeah, definitely.
Is the Hudson River anything to look at? Is it nice?
No.
I always thought the Hudson was gross.
It is kind of gross. It's gotten better, believe it or not.
Okay.
It always had a bad reputation, but it's gotten better. But but you had the really pretty city views like Weehawken and Hoboken. It's great. We took my daughter there for her 16th birthday to a restaurant in Edgewater, which is just north of Weehawken, and it's just beautiful. Like great views of the city. So
what's your median price there?
There,
No, here, like in your area. What's your
In
median
my
price?
area, in Bergen County, it's over 500,000. It's like
For a
5.
median price home.
Yeah, 5 and change. Yep.
So like a starter home. What? Give me a description of a starter home in your area, in New Jersey.
Starter home. Well, if you want something, so say something in the 400,000 range. Okay, so I just sold one in the 400,000 price point, and it basically is a knockdown. So yeah, or you could gut it and redo the whole thing inside, but that's what you're looking at. So around 400, even below 400, you can find them, but be prepared to do a lot of work. So that's how it is in my county. Yeah.
Mug alert.
Mug alert. We like big
FYI. Lawnmower always says, FYI, the coffee mug is normal size. Kristina is just super tiny.
That's a good point.
I love my real estate whisperer mug. I actually used to give away big mugs. Let me show you.
I need a mug.
I only have 2 left.
Oh my God, that's adorable.
Yeah, and I used to give these to clients. They were gumbo mugs, but the person that I used to buy them for sold her business, so I don't have them anymore.
Oh, that's awesome.
Awesome. It's awesome.
It's awesome.
What do you feel about marry the house?
Let's date the rate.
Marry the house, date the rate.
You don't know that term?
No. Explain that to me.
No, let me explain it to you. Date the rate. So date the rate. So if you're worried about buying a house at the higher interest rate right now, but you really need the house, don't worry about the interest rate because you can refinance down the road when that rate goes lower. So that's what we say. We're going to marry the house. We're dating the rate. It's temporary. We're not going to be, we're not committed to that 5.75 or 6%. If we go into a recession and the rates eventually come back down, you refinance. So there you go. That's what we call it.
I learned a new expression today.
See? Learn something new every day.
All right. Loan Depot is the third largest mortgage lender yet. I know them. I've actually spoken at several of their conferences. Stock is down 88% from last year and has lost over $100 million. Can this be a contagion effect if they file Chapter 11?
Huh?
Ooh, I know one of the guys over there. CR. I know a big dude over there.
Well, look at you.
Yeah. So I'm writing this down. And I'm gonna get the inside scoop from the Loan Depot people.
That's interesting. But
if I can get it done,
these mortgage companies, a lot of them are. Javier Vidana just did a video about these mortgage companies that are closing up shop now. Like these, I guess.
Well, they had ones. Well, yeah, because a lot of them based their whole their business plan on refis, right? Like, how dumb are you? Yeah, you were in their heyday for when the interest rates were below 3%, right?
Yeah.
Well, and then as soon as it went over and the interest rates went up, the amount of refis like literally dried up. Like people aren't doing refis anymore. And then the party was over, and it's like, we can't keep the lights on. That's it. Our business plan's done. I mean, that was just a stupid business plan to begin with.
Yeah, absolutely. But
yeah, mortgage lenders have a tendency to get over rambunctious. This isn't anything new. Ken Powell's question: do you do 203K loans? I'm not a loan officer. I'm a real estate agent. We're not.
I've never had a client that used them.
We have.
Yeah.
Oh, we have them here.
Really?
Yeah, we have them here because we have had so many things happen with floods and everything. Homes that need to be redone.
Okay.
But we're realtors, not realtors.
We're agents, or real estate agents, Kristina.
Yeah.
Make it simple so nobody can accuse us of mispronouncing.
We're realtors, not realtors.
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 No, I'm a realtor.
I'm a realtor. I'm a realtor from Jersey. I'm from up north.
Yes.
CC Moon says, Nostra Kristina ball for 2023 interest rates. Yeah, well, like I always ask, what do you think the interest rates are going to be at the end of the year? I ask people that all the time. What do you think the interest rates are going to be by the end of the year? By December 31st, what do you think we're going to be falling at it by the end of the year?
What do I think? We'll be at 7. I think I'm saying 7 or just under. I think it's going to be. Yep.
If inflation rate continues to go the way it is, I say we're at 7.
Yeah.
If we stabilize like we have with the jobs numbers and things are still kind of moving along the way it has been, we could stay at in the 5s, just like we're at right now. We'll be where we're at now.
But that would be a lovely thing. That would be nice.
I wouldn't be mad. I wouldn't be mad.
No.
But if it just it really just, this housing market has been the craziest, wildest ride for the last 2.5 years that I've ever seen. Like even crazier than the housing market during the crash, because we knew what was coming. We knew what was coming for a while. Once it got there, we had some bumps in the road trying to figure out foreclosures and short sales and everything else. But once we got that going, then we were able to help a lot of people get out of their house without being foreclosed on. I mean, but when we knew it was coming down the pipeline, it was all. Yeah. But this is like one day you wake up, the interest rates are up here, then they're down here, then they're up here. Then 1 minute they're saying, oh, there's an excess supply of houses on the market. Oh, just kidding. The builders aren't building any houses.
Right.
This has been the wildest ride.
It really is. It's been, like I said, the market's like the weather. I feel like every day it changes. You just don't, you wake up, right? You don't know what to expect. It's so frustrating. Like I said, I'm surprised I do not have an ulcer from the last 2 years. Which
you probably do.
I probably do. And I'm just, I'm just overcompensating. I'm just pushing it away, like ignoring it. But it was hard. It was really, really hard. Even for sellers too. Everyone's like, oh yeah, the sellers made out. But you know what? It was stressful on sellers too.
I don't feel sorry for them. I'm sorry. There was
but you know what? Hear me out. Because, when you're in these multiple offer situations, right? Here's what I ran into where people would say, here, I have cash. Just had this on a sale, right? I just closed on this like a few weeks ago. Oh, we're offering cash. Oh, guess what? In the middle of the process, you find out they were getting a loan anyway. What they did is they took the bank statements from a family member and said, here's our proof of funds. And then all of a sudden we get an email from the attorney. Oh, by the way, we're having an appraiser stop by on such and such date. We're like, why? You're paying cash. Oh no, they're going to get a mortgage. I'm like, what? So that happened a lot up here. So we had to be careful with that because God forbid, then the mortgage falls through. And especially when you're showing family members proof of funds, like I would tell you the vetting, the buyers I found for myself, that was so stressful because, I would do a spreadsheet and show what all the offers are, how much putting down, who's cash, whatever. And it's like, are you picking the right one? You know what I mean? Because
investors do that all the time. They'll say they're cash, and then by the end of it, they ain't gotten a loan.
But these are people. But these are just like average Joes. And for me and for my sellers, I will tell you, they were very stressed over that. Like, are we picking the right one? Like, we have 15 offers. And sometimes they wouldn't go with the highest one. They went with the best terms too. They want to be comfortable.
Well, of course.
So that was hard. And the buy side, forget it. If I don't ever want to hear highest and best. If I don't hear that for the rest of my life, I'll be so happy. I am so sick of that term. We're calling highest and best Tuesday at noon. I'm like, stop. Just stop.
I know.
Done.
Some of those listing agents were real snots about it too. CR is cranking out some questions here. They said, why is the second largest Wall Street landlord, Starwood Capital Group, unloading $1 billion of their residential portfolio? They're probably just going to sell it to another big investment firm. Mm-hmm. That's all they're doing. They're sometimes, and this is true of many businesses, they hear about something that people are doing or other investment firms are doing, and they're like, oh, this sounds great. And then they get into it and they're like, oh, this was a lot of work. I don't want to deal with this. This property management stuff is a pit. So they just go ahead and unload it onto somebody else because they're like, you've got the scale to do it. You've got the whole business plan to do it here. Take this off of our hands. We don't want to do with it because we're going to invest in something else. So I ain't worried. I'm not crying for investment firms. That's for damn sure.
No, we're not.
No. I
No.
don't feel sorry for hedge funds.
Yeah.
I'm not going to lose any sleep over them. That's for sure.
Nope. Oh no.
Yeah. Are they the second largest Wall Street landlord? Starwood Capital?
I never heard of them.
I would have thought that it was Invitation Homes. But whatever. Starwood Capital deals more with apartments. Not homes. Thank you, Eddie Teddy. That's my husband. Anybody who didn't notice the last name. I don't usually call subscribers pet names. Cece Moon with a $5 super chat says, do you guys think we might be experiencing a 2 to 3% mortgage rate phenomenon again in 5 to 10 years? Or do you think it will be a one-time fluke? Nothing. Don't ever take anything off the table, ever. Especially with interest rates. If you had said to me after what had happened in the last housing crash that we would see interest rates that low ever again, I thought there's absolutely no way. And the length of time that we've kept interest rates below 5%, no way. Like, that was crazy. And they had been saying before the pandemic, way before the pandemic, that they were going to increase interest rates. They had to for mortgages. They had to. And that we were most likely going to be looking at 3s, maybe even 4s. Then the pandemic hit. Then it went like way below that. So,
I know. Oh my God.
Nothing is impossible. Not a thing.
Nothing surprises me. That's for sure. So I'm just after this, that's how you got to look at life now. Just be prepared.
Here it is. Starwood Capital looks to offload $1 billion of single-family rentals. Starwood Capital is exploring the sale of 2 portfolios of single-family rentals, seeking to unload roughly 3,000 properties as the U.S. housing market cools, Bloomberg News reports Friday. 3,000 properties, again, is literally nothing.
Mm-hmm.
One of the apartment owners in the U.S., Starwood, was an aggressive buyer of rentals during the 2 years of the pandemic. In May, I don't know how to say the last name, Scherlich told Bloomberg that his firm owned roughly 15,000 single-family rentals and another 100,000 apartments, arguing that the rising mortgage rates would create more demand for rental housing. However, rising borrowing costs have tempered the investors' appetite. Still, some property firms seeing opportunities on the horizon, ready for capital in hopes of buying at a discount, reported by Bloomberg. 3,000 homes. Like, I'm gonna give you a perfect example. What everybody was blowing their mind. I mean, they were like, this is it. Zillow's dumping all of their inventory. They made a financial mistake. The housing market is collapsing. Look, I mean, put it there. Zillow dumps their inventory. Look at that. I mean, every single person was like, that's it. Housing prices are going to go in the toilet now because Zillow's dumping all their inventory. It was 6,000 homes.
Yep.
We are 5 million homes short. 5 million homes short of the most affordable homes that were needed in the market currently. That 6,000 or 3,000 or even 10,000 is like a hangnail of what the supply of homes that we need for those buyers. I ain't worried. That isn't what's going to set me off. That's for sure.
Definitely not. Definitely not.
Yeah, but it makes for a great title of a thumbnail for YouTube. I'm sure somebody's gonna latch onto that. Like, this is it. Look, exactly. They're dumping all their inventory. This is gonna collapse the housing market.
Oh, just wait. It'll be out this week, I'm sure.
And I'm a realist. I'm not saying that the housing market is going to go up forever. That absolutely not. That is 100% not what I'm saying. But what I'm saying is, like, I'm being very realistic when it comes to this. We are not seeing home prices going down 20, 30%. Yes, home sellers are reducing their prices because they were overpriced anyway. Some of them had really high hopes, and it needs to come down. Some of these home prices were absolutely stupid. So the reduction of sales price is fine. It's a good thing. We're still even seeing, like, to this date, if you look up the numbers right now, to this date, home prices across the country are still increasing. So
yep.
yeah,
they are
by the time of closing.
Right.
CR is like on it today.
Yeah, really.
Asking some serious questions.
Nice.
Thank you for being a part of the stream, man. It says, okay, why aren't realtors doing their research to know these things too? If there is a price correction, the homes will be upside down. Therefore, client cannot refi. Clients still have to be approved. I'm sorry I didn't research the topic you wanted to talk about, CR. I'm terribly sorry, but that was not what my topic of choice was. And I'm glad I will happily look, I did write it. I happily look into what exactly you're talking about. That specific thing wasn't on my radar. I mostly talk about affordable housing options. If you look at my channel, that's one of my focuses. I'm trying to find the most affordable homes for people that have the hardest time finding an affordable house. So that's that.
Okay.
Good question. What percent? Oh, this is a good one. T asked a question. It says, what percentage constitutes an actual crash? I'm going to throw that up on the screen, Eddie. I know you're doing something, so I'm going to put this up there. What, in your opinion, what percentage does constitute an actual crash?
Percentage of what?
Like, so okay, like I would say that your equity in your house would have to be below what the asking price of the houses are right now.
Right. Yeah, I agree with that. Yeah.
That would be a housing crash. So you bought a house for $200,000.
Mm-hmm.
You gained like $30,000 in equity. Then all of a sudden, overnight, just like it happened in the last housing crash, your house is now worth $180,000. That's a crash.
Yes.
That's a crash.
Absolutely. Yep. Yeah, but that's not, we're not seeing that. People still have a lot of equity right now.
The highest amount of equity in real estate history is what
true.
Yeah, it is true.
Yep.
Yeah.
Yeah.
So if the equity in your house is negative to what you can get.
Yes.
That's what I say a crash is. Tracy McLaughlin says, I just saw a report that jobs are down for the first week of July. Layoffs. I saw the exact opposite.
Yeah. Didn't you just show that article?
Yeah, I showed that at the beginning of the stream that jobs are up.
Huh.
Where they predicted it was supposed to be 250,000 jobs, and it was
375, right? Or
348 or something like that.
Or whatever.
Is a recession canceled? A strong jobs report appears appears a mockery of the shrinking economy argument. So, and show the exact numbers, Eddie, at the bottom. I forgot what it was. So the U.S. economy added 372,000 jobs in June, according to the Bureau of Labor and Statistics, blowing away economists' estimates of 250,000. As a result, the private sector is now recovered, and all jobs. Ooh, I don't know why that happened. All jobs had lost during the pandemic are now back. We're now back.
Yep.
So. We're back. America's back. We're working, man.
We're back. Thank God.
Yeah. Well, we got to get back to work, though. I mean, my God, the inflation rate is so ridiculous. You got to pay for bread. Mama's got to pay for some bread.
No kidding. And the gas, too. Although the gas prices have come down a little bit here in Jersey. Have they come down by
37 cents from last week. 37 cents. That's a lot.
Yeah. We came down, I think it was, we were like 480 something. And then we were more than that. Now we're down to like 443. That's the cheapest I've seen. So I'll take it. I'll take anything to keep spending $100 to fill my car.
I know. I know. I don't drive a lot, thank God. All right. right. Well, listen, we have been on for 1 hour and 29 minutes, but I want to thank you, Jackie B. I know.
Thank you.
We had so much fun, Jackie.
I had a blast. Can we do this again?
You guys, if you want to go ahead and want Jackie on again, let us know in the comments section right there. Make sure you tell Jackie that she did a great job and ask her to come back again.
Thank you.
Make sure you subscribe over there. There she is. Jackie Baker sells New Jersey. There she is. She's selling New Jersey.
Selling Jersey, the dirty Jersey. Yes.
She's selling the dirty Jersey. There it is. So make sure you go over there and say hello to her and give her a nice subscribe.
Thank you.
Also, if you're looking for a real estate agent in your specific area and it doesn't happen to be New Jersey and you can't find one in your area, just go ahead to my website, KristinaSmallhorn.com. Go over there and it says contact, or you can hit contact. And at the bottom there, you can ask for a referral for your specific area. I will get with you within a week and I will give you a call. If you leave your phone number, I will call you and we'll talk on the phone about what your real estate needs are. If you do not leave a phone number, I cannot call you. Amazing how that works.
Right?
Amazing.
It is.
It is. But I will happily find you. If I can't find you somebody, I'll let you know I can't find you some. There have been some places in rural areas of Texas. I'm like, I cannot find a real estate agent out there. And they were like, the thing is I've lived here for 10 years and I don't think there is any real estate agents.
Oh my God. Really?
Yeah. Well, apparently there wasn't. Everybody just knows each other. So when somebody decides to sell a house, they just sell them the house.
Each other and say, hey, you want to buy it? Oh my God, that's so funny.
They go, look at big. I'm like, I don't know how you expected me to help you with that. They were like, well, I just didn't know. And I was like, wow, I learned something new.
That is so funny. Oh my God. That's crazy.
Thank you, Jackie Baker. I can't thank you enough for holding down the fort while we had this torrential rainstorm that went through here. If you have, if you made it all the way to the end,
awesome.
I appreciate everybody putting up with the sound of the most ridiculous rainstorm. It is clear as a bell right now. By the way,
it is.
Stop.
Yeah.
Stop. So
awesome. Thank you, Kristina. This was a lot of fun.
Thank you, Jackie Baker.
All right, Kristina.
I love you. I love you very much. And I hope you come back again. I love you, man. You're so awesome. We should do coffee talk one more time. It's so
absolutely
fantastic.
I'm always here for coffee. It's fine.
You're always here for coffee. It's so good. So long, everybody. Next week, we'll be talking a little bit more about non-bank lenders because, CR man had some questions there and says I'm not doing my job. Yeah, I know.
Cool.
I know, but I'm going to do my job. Get some more information for you about that.
Awesome.
It might be an interesting thing. Hey, Jackie, do you dance? Because this is what we do. We dance our way out of here. Oh, you're going to do it? I'm surprised no one ever dances. You're more used to
I don't care.
Me either. We're too old to care. Dude. Eddie will keep it going just to keep us dancing the whole time as long as possible.